Back in the 1970s, personal computers were dismissed as complicated, out of these world devices. Too nerdy, too niche, not for the masses. Only hardcore engineers and hobbyists used personal computers back then. But then, all of a sudden, something changed. They invented the graphical user interface.
And a Xerox machine presents your morning mail on a screen.
What's the mail this morning?
It is because of this interface that you can point your mouse on icons, you can click your way across. It made things far more easier than having to write commands for everything. It really opened a very complex system for the masses. Quant investing in India is at the exact same turning point. India's retail investors are waking up to a new investing model. It is not stock tips, it is not even long-term holding. It is quantitative investing, and it's growing very, very fast. Just look at Quant Mutual Fund. This fund started just a few years back, but its AUM has exploded. The returns are solid and people are piling on to put their money into these funds. But this isn't just about one fund. Today, fintech platforms, in fact like the one that we built at Stratzy, are helping people run these quant strategies on their own portfolios. No mutual fund required. So how does this quant investing thing work? Think of it like a giant funnel. At the very top of it, we are pouring the Nifty 500 stocks, and at every level of the funnel, we are applying different kind of filters. At every layer of the funnel, we are applying filters such as fundamental, momentum, risk-based filters. And at the very bottom, we get a bunch of 10 to 20 stocks that you want to invest in. And yes, you don't hold on to these stocks forever. You rebalance, you apply the filter again. Monthly, quarterly, 6 months, based on how you have built your model. This is active investing, but backed by math, not mood. Quant investing thrives on large data sets, ratios, earnings, trends, volatility, all of it crunched by computational models. And these models are built using backtest. So you build a model, you backtest it on the past 10-year data. Then you improve the model, then you backtest again. And that's how you get very robust model that is working in every market cycle. It is not magic, it is engineering. But here's the problem. These models work well when rebalanced often and executed precisely. But you can't sit in front of your broker's screen every time you want to rebalance, and that is why automation is very important. Today, brokers like Zerodha, Angel, Dhan have provided free trading APIs through which you can place trades, track P&L, and also rebalance your portfolios every time you need. This is like having your private wealth manager, but it's a computer program. Just like back in 70s when personal computers were mostly being used by engineers and hobbies, today quant investing is in a very similar phase. Still a little nerdy, still a little manual. But as fintech tools get easier and smarter, millions of people will unlock the power of quant investing in India. Custom fit to their risk and to their style. We are unanimously heading into a future where you don't rely on fund managers, you don't panic when the market drops, and your portfolio is run by logic, not emotion. If this kind of future excites you, scan the QR code that you see right here and see what we at Stratzy have built for automating your quant investing. Do not forget to subscribe because the quant revolution isn't coming, it's already here.